Well, first of all, I think we all have to admit that if you look what has happened over the last 12 to 15 months in the macro, on the geopolitical side, I think economies have really shown how resilient they are. Because a year ago, a lot of people would have said there is a quite material recession in Europe, in Germany, potentially also in the US. And if we now look back, I think we see that the answer we have given is actually showing that we fared quite well over the last 12 to 15 months. Now, I think the situation remains complex. I do believe that with a very persistent inflation, interest will further go up on both sides of the ocean. Yep. And I also do believe, Guy, that the interest will then stay a little bit longer elevated than potentially a lot of people think. And that means that I still believe that there is a chance of a mild recession in the US at the end of 23, early 24, as well as in Europe. You see that Germany is in a technical recession, has been in a technical recession. So I don't believe that we will see a material recession, but I do think that uncertainty still prevails, and hence we need to watch out. And the second half of 2023 is for sure a half which is still complex and is still challenging.
So does that mean that the Q2 guidance that your CFO gave a few days back was just a blip? He was talking about fixed income being down 15 to 20%. You talk about the fact that the second half is going to see significant uncertainty. That's a good environment for fixed income. So therefore, was the Q2 guidance just a blip? And do you still believe that the full year numbers are going to be better than the numbers that James gave?
Well, let's start with the overall bank, and there we see a good momentum. That is the strategy of Deutsche Bank, that we says we need a more balanced bank. That was exactly what we wanted to achieve in 2019 when we called out the transformation of Deutsche Bank. And we see the results. We have a very strong corporate bank, a very nice developing private bank. And therefore we can confirm our 28 to 29 billion of revenues for this year. We see the momentum. We see a Q2, to be honest, Q2 2023 from a revenue point of view, which is higher than Q2 2022. So overall, I would say this bank is faring well. The strategy is paying off. With regard to the investment bank, we always said that we had a record year. We had an extraordinary strong year in the FIC business in 2022. I still think that actually in Q1 and Q2 we have done well, but the overall market is a bit weaker than in the record year of 2022. But I do believe with some uncertainties, for instance, the debt ceiling issue going away in the US, then with the still complex situation which is in front of us, I do believe that in Q3 and Q4 there is momentum in the business on the fixed side. But for us as a strategy of Deutsche Bank, it is important that we further balance out the investment bank overall. We have a very strong FIC business, we have a very strong DCM business. What we really wanted to achieve is that also the O&A business is further strengthened, and hence we have put a lot of investments into that.
So just to wrap this part of the conversation up, it's going to be an operating environment for the FIC business that is likely to be less good than last year. Q2 may or may not be a blip. You still see uncertainty in the second half of the year, which could provide opportunity. So on balance, the numbers are likely to be slightly better than the 15 to 20% that James guided to.
That's what I would say for the coming months and weeks. Again, Q2 was also a particular quarter, given the situation also which we had in the US. We can already see also now in June, on the most recent days, that there is momentum in the business. So I'm overall actually quite comfortable also with the FIC business. And again, Q2 was a particular quarter. I would say that the FIC business in Q3 and Q4, I think there was a slight recovery.